Welcome to Factful Finance, where we make finance not just easy to understand, but exciting too. Today, we're diving into a question that's been on everyone's mind. What are the best stocks to buy right now? Now, I know you're probably thinking, the stock market's unpredictable. How can anyone know what to buy? Well, you're absolutely right that market fluctuations can be daunting. But here's the thing. While we can't predict the future, there are proven strategies that can give you a solid foundation for making informed investment decisions. And today, we'll walk through some of them together. Before we get started, I want to remind you that this content is for educational purposes only. We're not endorsing any specific stock or product. Always consult with a professional before making investment decisions tailored to your financial situation. Let's jump right in. The first thing you need to understand is that there's no one-size-fits-all answer to the question of which stocks to buy. What works for one person might not work for another. That being said, there are some key factors to consider that can help guide your choices. Step 1. Understand your risk tolerance. You can't dive into the market without first understanding your own financial comfort zone. Are you someone who's willing to take on a little more risk for potentially higher rewards? Or are you a conservative investor looking for stability? Knowing this will help you narrow down the kinds of stocks that are right for you. Step 2. Look for sectors with growth potential. As of now, there are a few sectors that are seeing significant growth. Take technology, for example. Companies in AI, cybersecurity, and cloud computing are booming. And experts are predicting that these trends will only continue. NVIDIA, for example, has been a game changer in the AI space. They're at the forefront of chips for artificial intelligence, and their stock has had an impressive run. But there's always more to the story. Other tech companies like Microsoft and Alphabet, Google, are also huge players to consider for long-term growth. Their diversification and investment in future technologies make them solid options. Step 3. Don't overlook dividends. Not all investors are looking for explosive growth. Some prefer a steady income. If you're someone who likes a predictable return, dividend-paying stocks might be your answer. Companies like Johnson & Johnson and Coca-Cola have a long track record of paying reliable dividends. While these stocks might not offer the same growth potential as a tech giant, they provide stability and income, which is essential for many investors, especially those in retirement. Step 4. Diversify your portfolio. This is critical. Even if you find some great stocks, it's essential to spread out your investments across different sectors and types of assets. If you only buy stocks in one industry, you're leaving yourself exposed to market volatility. So, consider mixing in some real estate investment trusts, REITs, or even some commodities. A balanced approach can minimize your risk and optimize your returns over time. Step 5. Pay attention to market trends and data. Right now, the economy is in a bit of a transition phase, with inflation rates coming down and interest rates being a key talking point. Experts recommend staying informed and watching how these macroeconomic factors impact industries like real estate, energy, and even retail. For example, ExxonMobil and Chevron have been solid performers in the energy sector, benefiting from rising oil prices. On the flip side, high interest rates have been tough for sectors like housing and mortgage lending, so it might be worth approaching those with caution. Let's put all of this into action. Let's say William, a viewer like you, is looking to invest $10,000. He's in his early 30s, so he's comfortable with a bit of risk, but still wants to play it smart. William decides to divide his investment across 3 sectors: tech, healthcare, and energy. He picks NVIDIA for tech, Johnson & Johnson for healthcare, and ExxonMobil for energy. After a year, his portfolio is not only more diverse, but also positioned to benefit from the continued growth of these key sectors. Now, it's your turn. What's your investment strategy? Do you prefer high-growth stocks, dividend stocks, or maybe a combination of both? Share your thoughts in the comments below. We love hearing from you. Before you go, if you enjoyed this deep dive into the best stocks to buy right now, don't forget to like, subscribe, and hit that bell. This way, you'll never miss out on our expert financial insights that can help you reach your financial goals faster. And if you're looking to take your investing knowledge to the next level, we think you'll find the video on screen next interesting. It's packed with strategies that could transform your financial journey. Thanks for joining us on Factful Finance, and I'll see you in the next video.